Hey folks, Dan Frio here with your real estate news for December 17th, 2025. So yesterday we started the day with this. Unemployment rate hit the highest level in 4 years. What you're thinking the first thing is, it's bad news for the economy, but it's fantastic news for interest rates because we know the Federal Reserve, they're watching two things. They're watching the unemployment rate and they're watching inflation. Well, with this number coming in so bad, you'd think, okay, this has to bring down mortgage rates, right? Well, yesterday, here's what we saw. We saw mortgage rates, they dropped down 0.02. So that wasn't enough to really push the Federal Reserve or the markets to say, the Federal Reserve is going to cut for sure. So today we're going to talk about these things right through here. We're going to talk about the unemployment rate. Yes, it went from 4.4 to 4.6, but the PCE, that's the number that the Federal Reserve monitors for inflation. That's coming out this week. So we're going to have a combination of both these, and that's basically what the Federal Reserve monitors. These will have an effect on these things over here as the news comes in. So if you're watching this video, you're maybe a homeowner trying to refinance and say, okay, where are rates? Maybe you're a home buyer thinking, okay, how do I budget this and figure out where mortgage rates are going to be next year so I can figure out if I can buy a house or not? Maybe you're a realtor or loan officer trying to explain these things to your clients. So my goal each day is to come in and explain to you guys what the heck's going on with those and the whys behind it. So today's why is right through here. The unemployment rate. Well, the unemployment rate ticked up yesterday. Okay, and then here's what the Federal Reserve looks at. But tomorrow and Friday, we're going to get some numbers right in here on the inflation numbers. But first, let's get over to this interview. This is a former Fed official, and he's probably a professor somewhere and an attorney somewhere and something else. But let's see what his take is on these numbers. And is this basically what we needed for the Federal Reserve to aggressively cut more in 2026? Well, let's get to the interview.
Joining us right now to talk about how today's jobs number impacts the Fed's rate plan, former Atlanta Fed President Dennis Lockhart. He's a professor at Georgia Tech. Good morning to you, sir. You saw the numbers. I don't know how much you take away from them at this point, how much you think even the Fed is looking at those numbers in terms of how it's going to impact their plans for 26 and beyond.
Well, I agree with much of the commentary we heard earlier. I don't think this report changes much, quite frankly. The committee is divided, but the body language I picked up from the press conference and some of the communication was that the Fed would prefer to pause for a while, wait and see how the economy evolves. And I don't think this report changes that. So the low probability that Steve pointed out earlier of a January cut, to me, is in line with reasonable expectations.
So he's saying this jobs report isn't really going to affect what the Federal Reserve does. So now let's get over to here. Here's what I want to explain to you guys. What really affects long-term yields? And long-term yields, what I mean by that is the 10-year Treasury, 30-year Treasuries, and mortgage rates. Well, the biggest factor in here is inflation. We know the Federal Reserve came in and they said, okay, we know we were supposed to monitor inflation and the jobs report, but we know inflation, it's a one-off because of tariffs. So now we're focusing on the jobs report. Well, we got that number, and that's not going to skew the markets or the Fed. So now how's this number going to affect things? So here's what we want to focus in on. CPI. What the CPI is consumer inflation. That's kind of things like when we go buy eggs, that's our consumer inflation we monitor. What the Fed monitors and the government monitors, it's kind of the same thing, but they call it the PCE, the personal consumption expenditure. Okay, so that's what they monitor. Why it matters, right through here. Long-term yields are essentially bonded claims on future inflated adjusted dollars. So that's what these bonds are for, how inflation is going to affect our money. Okay, so let's get over to it. Here's what we're going to get the rest of this week. Okay, on Thursday, there's nothing coming in today. On Thursday, we're going to get the CPI. Okay, you're looking at several different numbers here. This says core MOM and then CPI, YOY. What does this mean? Well, core CPI means they stripped out food and energy like gasoline because gas prices in Illinois right now are under $3 a barrel or $3 a gallon. Fantastic there. But that's what you're seeing month over month. Core, they strip out the food and energy. CPI, it's just everything in the basket. It's basically a basket of goods and services. They timestamp it at one time in history. Then they keep adjusting or checking those numbers on how that basket of goods has fared over the years. So that's that. And then year over year and month over month, that's what that means. Initial jobless claims we're going to get tomorrow, as well as continued claims. This is going to give us basically the health of the economy. Then on Friday, that's the number that the Fed monitors, that PCE number that we, if you go back through here, what they monitor right through here, the PCE, that's coming out over on Friday as well. So we're going to get a slew of data coming in over the next few days. Well, if the jobs report, the dismal jobs report we had wasn't enough to do anything. Well, maybe the PCE, which I'm really not thinking it's going to go up any higher than this, if it basically stays flat, well, the Federal Reserve's probably not going to do anything for the time, maybe probably the next few meetings. So that means mortgage rates and rates in general probably aren't going to move all that much. Well, let's get over to the stock market. Let's see how this is faring with really no news today. Well, we got the Dow Jones. This is kind of a Cinderella story. So if you're new to my channel, please subscribe down over there, because if you're a homeowner, home buyer, we'd love to educate you guys. Here, hold on a second. If you're a homeowner right now, what do you do when you're trying to follow this? I know it's a mess. Well, go to my website. We created a tool right through there. It's called RateWatch 2.0. This is for homeowners. Plug in what interest rate you'd like to, look at refinancing. What we're going to do is actually, we don't sell the data. I'll call you. We'll go over the numbers, see if it makes sense. Let's say you're at 7 and you're like, Dan, when it hits 6, reach out to me. Let me know what the numbers are. That's exactly what we're going to do. We have hundreds of people at 6% and below. So as soon as rates hit 6% and below, please, we'll be reaching out to you, I'm sure. But let's get back over to here. Here's what the markets are reacting today with really no news out. There is going to be Fed officials talking. That will skew the markets one way or another. But here's what we're looking across the board. We got the Dow Jones, the S&P, and the NASDAQ all up. That's great news for investors. Oil is up at $56 a barrel, but we still love it. Anything under 60 is huge, huge news for inflation. Then we got the 10-year Treasury. It's ticking up 0.01. Really nothing there. So really nothing going to happen today in the bond markets. Stock market's looking like it has a pretty good day right through here. So now let's get over to my section for those home buyers out there looking to build. Should you lock or float? So if you're closing past 30 days, just float. Just float. And here's why. If you're closing within 30 days, lock it in, because you're during the holidays. I feel like a broken record. It's during the holidays. Don't fret about this stuff, because mortgage rates are only ticking up by 0.01 or 0.02 every day. Sometimes we see rates going up 0.25% in a day. I don't think we're going to see that anytime soon. So right now I'm saying if you're closing within 30 days, lock them in and don't worry about it, and just close and just enjoy the holidays. If you're looking to buy in the spring or looking to build, just float. Reach out to us. We'd love to help you at least understand which programs you're qualify for and the whys behind it. Then you can check which program is available to you. But right now I'm just saying, if you're closing within 30 days, lock them. If not, please float them into your closing. But let's get over. I'm going to do my public service announcement. I haven't done this in a long time. Do you realize when a financial institution pulls your credit for a car loan or a mortgage, that credit data now can be sold. Yeah, it can be sold. So your financial data can be sold. You want to stop it, especially before you go out and apply for a car loan or even maybe a mortgage loan. Because what will happen is, once your credit is pulled, they're going to sell that data. They're going to sell it to 10, 20, 30 different entities. You're going to get inundated with phone calls. Do you want your financial data sold? If you don't, go to optoutprescreener.com, go down, scroll down through here, and just put in your information. I didn't create this. The credit agencies did this, but that is my public service announcement for today. So let's get over to conclude this thing. In 42 days, the Federal Reserve, they're going to do what? What are they going to do? Well, they're actually not going to do much anything, because there's a 75% probability or a 77% probability at this point. The Federal Reserve is going to just stay with rates where they are right now. So I'm really not expecting rates to move much at all through the holidays, especially into January. My expectations for January, the first quarter of Q1, is basically rates over there at 5.875 to 6.25. We're a little bit elevated then from there right now, but it's going to probably come right down in line and just stay sticky right there for a long time. Just like the former Fed official said, I think they're going to be, the Federal Reserve is going to be on a rate pause for quite some time. So hopefully now with all the data that we just went over, if you're a homeowner, you know where to go to check out mortgage rates, or you're a home buyer, you know what you should do. Realtor, loan officer, hopefully now you know a little bit more about what in the heck's going on with those and the whys behind it. So thanks for checking out my video this morning, folks. My name is Dan Frio. I'm actually the host of the Rate Update, and I'm also a licensed mortgage loan officer in all 50 states as well as Puerto Rico. So here's how it works. My bank that I work at, I am blessed enough that they provide me licensing through all 50 states as well as Puerto Rico, but they are also ingenious in this effect. They're like, okay, when somebody calls in, they're trying to find the best rate and the lowest fees in the market, right? Well, wonder if we get set up with multiple banks, credit unions, other lenders. So we have over 30 different lenders we work with. We can provide you their rates, their guidelines, their programs. How do you get involved? Well, just go to the rateupdate.com right through here. You can give us a call, schedule an appointment. You can even put in your application right down through here. We usually don't like that because you probably want to know a little bit about us, and we sure want to know a little bit about you so we can make sure you're putting you into the right programs and putting you on the right path to home ownership, or maybe looking to refinance to save some money. So folks, my name is Dan Frio. Please don't forget to subscribe down there. So every day I post a video, you get an alert, and maybe it's something you want to watch and you can just learn something for the day. Thanks for watching, folks. We will be live today to show you behind the scenes on how we compare your loan with over 30 different lenders. Check it out. We'll be live. Even give us your information. We'll provide your quote live for you as well. See you then. Otherwise, I'll be here at the closing bell, let you know how this mess ends for the day. Thanks for watching, folks. See you then. Bye-bye.